cannot. Oh man, how you doing?
Never a dull moment. Never a dull moment.
That means hilarious.
I've kind of like embodied the meme. I just want to put it out there.
Oh
How are
god.
you, Jolene?
I'm fresh off the plane from Vegas, baby.
Okay.
And trying to, get back into the Seattle swing of things.
Y'all caught
Appreciating
that
the
ninth
very
round action?
cool weather here because it was over 111 degrees. The girl was dying.
I ain't gonna lie, I'm getting cooked.
Exactly.
Oh no. Oh, I already know what time Vic is on. So without further ado, let's just get it going. What's up, y'all? I'm Mark Monroe, accompanied by my wonderful co-host, co-producer, and co-creator in all things galactic. Give it up for none other than the wonderful.
It's Jill and GC in the place to be. What does it, cousins, on this fine Tuesday evening?
Yes, indeed. And we got a lot to get into because we got to talk about some artificial intelligence. And I'm probably sure you guys haven't really thought about it in this type of way. So without further ado, go ahead and cue that intro. I just want to say shout outs to AMD today, but we're gonna
The champ is here.
the tribal chief is here, but we'll get into that in maybe on another day, when
Gosh.
all right, so we got a lot to get into today. So we got AMD's earnings, in which that that was interesting. Last time I checked, I think that their stock is trading at 120 in the aftermarket. It closed at 117. So a nice sizable. I think it got all the way up to 125 at the high in the aftermarket. So whoa. But I think all roads lead towards Thursday with Apple and Amazon's earnings. I think those are that's literally going to set the stage for everything. But we got a lot to follow up behind, because if you didn't watch yesterday's show, Lawrence and Tiara had an amazing show. It was phenomenal. And, we got to follow it up. We got to bring some amazing heat to follow it up this week. So
on that replay, for real.
Yeah, for real. Like, definitely. So who was first in the chat? Because, we want to know, Zen and Fit with the hi. Okay, we see you. What's good?
Hey,
thank you for having your notification bell turned on. We out here. And okay, so let's get some of the other stuff out of the way. Like, for example, if you like the show, go ahead and hit the like button. If not, you can wait till later. We'll definitely repeat it, just in case if folks missed it when they first come into the classroom. And then on top of that, be sure to subscribe, because there's a ton of great content creators, not only just myself and Jolene, but you got Lawrence and Tiara. You also got Abby and Chris and Mark and Mo, and many more to come. So go ahead and subscribe, because there's a ton of great content, ton of great conversations, and lots of learning. And of course, it's very entertaining. So yeah, about that though. So Jolene, let's roll it. So all right, so AMD reported earnings.
They did.
And so I guess I got to figure out, how am I going to do this today? Because, today feels a little different. Like, okay, we'll start off with the normal. We'll give them the normal, like how everybody else probably will look at the earnings and everything else.
Yeah, let's start, an accessible point, and then let's kick it to like the come up series style.
Okay, I'm with that. So let's just keep it simple. So here was the earnings from Q2. Pretty much here's the revenue breakdown. Data center revenue represented 1.3 billion, which was a sizable portion of that pot, up or down 11% year over year. And then on top of that, that's primarily due to lower sales in their third gen EPYC processors, which is from the server side. Client revenue came in at just shy of $1 billion, reduced shipments resulting from a weak PC market and a significant inventory correction across the PC supply chain, which I strongly believe that we're getting close to that PC supply chain being, that correction ultimately being officially corrected and we're over that hump. And then of course, gaming revenue, which is very sensitive to the PC market, was at 1.6 billion. But you know, the major saving grace there is that the semi-custom revenue, which is where AMD makes those custom semi chips for PS5 and Xbox. So those tend to be doing well, only down 4% year over year. And then of course, embedded revenue, that's primarily driven by strength in industrial vision and healthcare, automotive tests. So a lot of that, and that's up 16% year over year. So remember what I was talking about last week where I was like, look, it's time. It's time for us to see like, hey, what's going on, because that Xilinx, it wasn't Xilinking earlier. So I'm happy to see that.
Yeah, we needed to see it.
So pretty much their gross margin came in flat on a year-over-year basis at 46%. Cash from operations was 379 million, and then their free cash flow sitting at a pretty $250 million. So that's pretty cool. And of course, with the non-GAAP gross margin at 50%. So that's pretty dope. Now, this is nice and everything. Like, it's,
you mean like viewing it this way, like, you know how?
Yeah, it's cool, but you know, come on, we're the come up series.
Yeah, could we like go future mode or something?
I think we can definitely do that. I think it's definitely time that we kind of like bring it up a notch, because I think that everybody's so accustomed to looking at that. And, you know, we like to be a few trendsetters in the room when we walk in, even if it's a little bit of Afrocentric futurism. So let's go for it. So let me turn everybody's attention to, and we're going to do another share screen. And this time we're going to open up something, which I don't know if y'all heard about it, but so there's a company that like everybody knows about ChatGPT from OpenAI services. And of course they know about Google's Bard service, which is pretty cool. But, you know, your boy happened to be stumbling across some information, and, you know, sometimes I travel down a rabbit hole, and I did, Jolene.
Yeah, this is wild.
Yeah, so it's going to be a little different today.
Yeah.
All right, so I'd like to introduce everybody to Claude.ai. So it's by Anthropic, which is a private company, but, you know, for those of you that also want to pay attention to this company, because their valuations are creeping up, and what I can easily see is either that they're either going to be acquired, or essentially they're possibly going to be a potential company that goes public. I wouldn't be surprised that over the next 3 years, we'll probably see some more AI-based companies enter into the public market space, where it starts to get even more interesting. So the company is Anthropic AI. They do some pretty phenomenal work. They're very much so cutting edge. Now, of course, you see the chat down here, but, you know, like I said, we're the come up series. We like to do things a little bit different. So let's just say if you wanted to add some files. So let's just say, you know, I'm going to come over here and I'm going to look at that report from AMD. So there's a report. I just dropped it in. All right, now I want to give the AI some instructions. So, you know, let's simply give it to me like, okay, hey, analyze, right? We want it to analyze the document, or the doc. I could just say the doc, and give me some, or give me all of the key highlights, good and bad, right? Simple, correct?
Mm-hmm.
So it's analyzing the doc. All right, so it takes a little bit of a minute to like literally go through. Now, here we go. So we literally have the AI going through the summary of AMD's earnings, giving us the good and the bad. And so, like, for example, the negatives was GAAP operating loss was 20 million compared to the operating income of 526 million a year ago. Gaming revenue declined 10%. GAAP earnings also per share was down or was at 2 cents, down 93% year over year. Cash and cash equivalents decreased by 3.8 billion from 4.8. And then on top of that, lower demand of PC market. So if you really think about it, these are all the highlights that essentially that you just saw in that same infographic, right?
Mm-hmm.
But now I'm like, okay,
That's cute. But
based upon this information, based upon this information, is this a signal for risk on or off when it comes to buying AMD stock? So based upon this information, I would say it presents a mixed picture for AMD stock. So reasons for risk off. Okay, so it's giving me X amount of things, and then on balance, I would say the report leans more risk off for AMD stock given the revenue declines, EPS miss, deteriorating cash flows. However, if their new product ramps go well in the second half, the risk reward could improve the current levels. It presents a mixed picture right now for AMD stock. Interesting. So it mentions something as it pertains to a product ramp. Okay, so what do you mean by product ramp? What is AMD working on? Okay, so this could be interesting.
let's see what Claude says.
Okay, so now we have the 4th generation EPYC servers, and then the Ryzen 7000 Instinct accelerators, and then of course Xilinx. So, excuse me. So essentially, these are the products that are within the roadmap. Now, question, Jolene, do you think that it's literally pulling this from the PDF document that we were just talking about,
No,
or
I think it's just. I think it's accessing just whatever is out there on the internet.
So it's pulling in both the data in which that it knows from the document. So it gives breadcrumbs from the document. And then on top of that, it's also looking at it from a standpoint of, say, for example, the actual internet and what it's learning. And it's putting both of those two together to literally formalize an actual strong point. So, and these are all things in which that we look at, and these are things that you can literally start doing today. And of course, you know how we do here at the Come Up series. We like to give you services for free that you can utilize. Now, Jolene.
Yeah.
Now, this seems kind of easy and everything else. It seems pretty cool, but do you think that we can go a little bit further?
Of course. This is ran on some AI, of course.
Okay, so let's see here. All right. So what if I could tell you that if I was able to pull something from, okay, let's take this. I'm going to stop sharing here, and don't worry, we'll come back. I promise we'll come back to this. Because I want us to literally get into the weeds of some of the things. So without further ado, I'm going to actually bring you guys up to something in which that, I actually got to give this one a special shout out to Christopher Bush on this one.
Oh,
because he and I were sitting back and chatting about something, and then this came up in conversation, and boom, here we go. All right, so if you guys can see my screen, you guys can see. Of course, sorry y'all. I like to look at things at literally 67%. So forgive me.
Yeah,
all right, so
good eyes you have. Anyway,
huh?
I said, don't be bragging about the good eyes you have.
Hey, hey, when you got it, right?
I need about 100%.
All right, so Elevate ETFs, Elevate shares. I think people have pretty much heard of this. It's where they provide ETFs, and then there's this within the Elevate. It's within the Elevate family. There's Yield Max ETFs. Now, I want to bring you guys to a specific ETF, of course, because I wouldn't be me if I didn't do that. But imagine if you can do options income as a strategy within an ETF. So imagine if they literally use this, if they literally put together an ETF in the form of options that were inside of it. So what's in this holdings right now, if we look at it, give me a second. Okay, here we go. So within this, they have, of course, so 40% in treasuries here, or about 35%, 35%. And then, of course, they have cash on hand. And then, of course, they have a Tesla call option. And then, of course, they have, Tessie. And then, of course, they have another call option. And then they also have a put option. Now, I'm going to do this. I'm literally going to download, right? So I'm literally going to download. You guys literally just saw me download the intraday trades. So I'm going to take that.
Okay.
And we're about to do some pretty cool magic here with this. So what if I was to tell y'all, let's go back to our wonderful Claude. And we're going to share. Hopefully you guys can see the screen.
Yes, at least.
Okay, so we're going to take that same CSV file that I just pulled up. So as you can see, there's just nothing but data there, right? So there's just data.
Now I see it now.
All right.
Wait, Mark, let me ask you this right
Yes.
quick.
Yes.
Now is it going to remember what we uploaded previously?
It does. It saves all your chat history.
Okay.
So this, I just pulled up a whole new chat because this is something completely different, just for whole different testing purposes. So let's say that if I wanted to say, all right, well, analyze this and analyze this document and actually tell me the strategy that they are using, right?
Mm-hmm. Ooh, reverse engineering.
So I'm literally now reverse engineering the trade. So it's now giving me not only the trade, it's telling me actually like what's happening. So it says they bought 495 Tesla contracts for September 15th of 2023. Call contracts at a strike price of 265 for $15.30 per contract. And then, of course, they bought some put contracts for 265, and then a long call and short put at the same strike creates a long straddle. So they just literally created a straddle where it's just pretty much, it can go either up or it can go down. They also sold 495 Tesla calls for actually the August 4th, which is with a 272.50 strike price for $1.02 per contract. This helps fund the long straddle by collecting some premium income. So now what they're doing, they're saying the long straddle benefits from high volatility in either direction, of course. The trader is betting on a big move in the Tesla stock by September expiration, but doesn't know which way it will break out. The short call sale reduces cost but caps upside profit potential. Overall, it's a volatility play using a long straddle options strategy. Okay, so very interesting, right?
Mm-hmm.
So I'm going to, I want to play along. I'm going to check out NVIDIA. And I'm going to say, well, what about this one? So pretty much what I'm now understanding is when I look at this ETF, that's an options strategy for income, it's letting me know exactly how it's constructed. It's literally just telling me how it's constructed. All right, so I can ask, okay, what's the overall purpose for their structure? So to profit from an expected increase in volatility, so by using the straddles, to express a market view without directional bias, to gain exposure ahead of a catalyst, to capitalize on mispricing, and to benefit from earnings moves. So essentially they were in these positions well before, say, for example, earnings took place for Tesla, and of course before NVIDIA, because NVIDIA hasn't reported yet. So they're essentially looking at it in the sense of the stocks either trading in a range for X amount of time within the straddle, and then ultimately looking for some type of price action move, either to the upside or to the downside, but also essentially managing their risk. So very, very interesting, because imagine if you go through this and you pull up, like, say, for example, CSVs or PDF files from other companies. So, for example, remember that earnings that we were just talking about like a while back? Let's see here if I could pull it up. Let's remember Alphabet's earnings.
Yeah.
So is this a risk on or risk off opportunity based upon the data in this doc? Now, mind you, I just went through cover call. So pretty much they gave us the cover call option strategy on Tesla as well as NVIDIA. Well, now it's reviewing this as it pertains to Alphabet. Now, of course, now remember, this is AI. So again, there's mistakes that is necessary that are going to be made, and everything else is not going to get everything right. But it gives you some type of sentiment as it pertains to purely looking at the data. What does the data say, and how does it actually analyze the data? Now, of course, check this out. Create a bull case, or a bull and bear case thesis for investing in Google based upon, sorry for my typing, y'all. It's been a long day. Based upon this earnings report. And
Claude is working.
Show enough. And there you have it. So now you have something in which that you can literally put together as it pertains to setting forth X amount of cases for yourself. And then from there, literally going through and examining it for yourself. So in summary, the bull case sees more momentum rebounding in the core business margins, expanding in strategic opportunities like AI and cloud growth, but the bear case focuses on macro risk, increasing competition, and potential growth and margin pressures ahead. Now, of course, you can use this across many different forms and fashion. So like, for example, if you wanted to use it in your daily workflows and stuff like that, I mean, I'm probably sure that you'll definitely find some strong value there when it comes to utilizing the AI services. But again, cheers.
So this is actually a really good opportunity, one, to sharpen your ability to ask the right questions. So like the prompts, it's very conversational. And you can also ask it things like, like, what am I not considering, or what else should I consider before engaging in a risk on position, and see, what comes up, just so that, you are able to consider everything in its totality before making that decision. But definitely, do not just go out there and base everything on what Claude says. Claude don't know you. Okay. Claude does not know your life, does not know your story. So just make sure that you also combine this with your own due diligence. But this is a great starting point. And it also, all these other companies out here, Mark, that before, this like explosion with the AI, like, and generative AI, it kind of, before, you would have to really think about, like, okay, you would have to read the document. And once you read the document, especially if you're a beginner, you still might not know, the questions to ask or how to think about it. I mean, well, if you're a come up cousin, you probably do. But like, if you weren't a come up cousin,
we're scholarly here,
Right. So let's say you didn't know. This actually is very helpful. It's also helpful to those that have, that have been in the game as well, because it can just synthesize information. You can ask for talking points. I'm thinking like from a creative aspect. Let's say you put in a document and you're like, okay, create some talking points for my podcast about AMD
Yep.
today, or,
Yep.
oh, I want to do a YouTube show about, earnings in general. How do I go about that? What are the topics? What are people mainly talking about or whatever? So you
Yep.
can like really get creative with just the whole concept of generative AI.
Yep.
Your own
Yeah.
investment strategy.
And I think the thing that I like about Claude, did you guys notice something that I was doing throughout the entire thing?
What?
I was asking it to analyze every single document. So I wasn't like, and I said, pretty much give me, say, for example, points from, a non-biased perspective of trying to ask the AI to give me like, okay, hey, give me the positives, give me the negatives, because it gives me a well-rounded story based upon what the data tells me. Now, of course, I'm going to formulate my own opinion. Like that's natural by osmosis. But again, it's like it gives you a very solid basis of, okay, hey, how is it that you could potentially even formulate questions? And then on top of that, once you like think about it in a simplistic way, if you're thinking about it from an investor, you can even ask, what are my risks? The biggest thing that I like I said, that I think that Claude brings to the table is the fact that it gives you the ability to analyze documents. Now, I think the next step that I think that is going to be amazing is when AI is able to also crank out documents. That's going to be a whole different situation, but it's something like I said, it's something in the sense of just gathering data points and like literally using it to collect data and understand the data. And then essentially from the data in which that you're analyzing or that you allow it to analyze, then, okay, where do you fall? Where do you fall upon this? Like, you're going to see, like, it's kind of like looking at an athlete, right? Or looking at something where it's like, okay, hey, it sounds great on paper, but what does the eye test tell you? Like that's going to be the major thing that currently that we have as an advantage right now over artificial intelligence is, what does the eyes tell you? Like the stats and everything else, I can have those things, but there's nothing like having the eye test alongside that supports the stats and everything that it shows me. So this is pretty cool, but again, it's very much so in its infancy. But I wanted to show like, okay, hey, how is it that you can utilize AI? Now, of course, you can do this with the 10Ks of a financial report, like, because a lot of folks are not going to want to sit there and read an entire 10K. So now you can literally use it to break down a 10K. You can use, and the beautiful thing about it is it can also look at PDFs and do the same thing. So notice how I gave it a PDF document and I gave it a CSV. And it was able to give me analyzation from both sources. Now, a PDF document, it took a little bit longer because, of course, it has to read through all that rich text, versus when it's looking at an Excel document, it's just looking at it through certain cells that it can easily just like, okay, I understand this. Here's the syntax.
Well, I'm curious, to come up cousins, y'all. Throw it in the chat. What are you going to do with this tool tonight? Are you looking at earnings
That
yourself?
is a great question.
I want to know. So put it in the chat so I can see what y'all got going on with Clyde.
Yeah, because like somebody was like, hold up, let me fire up this laptop. I'm trying to see something.
Vic said he's planning world domination.
Oh, well, there's that. Yeah, there's that. But there's something else that I wanted to show people though, because there was, this was also pretty twofold when I brought this up for everybody. So let's see if I can pull it back up for everybody, the TSLY and the other one. So interesting thing about it, and especially in a space where people are going to be looking for dividend income, the interesting thing about it is, you're talking about 30-day SEC yields. So essentially you can start making these things on, this is a monthly dividend position. Now, of course, if we look at the performance of, say, for example, look at the since inception, as it pertains to almost 23% versus the S&P returning 15.9%. So, and then of course, year to date, then we also have a 68.17, and then of course the S&P 500 returning just shy of 20%, 21%. Now, here's the thing when we look at it as it pertains to the dividends. So if you're holding large dividend quantities of this, So let's say if you're bringing in, let's say anywhere from, I don't know, 50,000 all the way up to, let's say $1 million or more, look at the dividend distributions in which that you would have received since January. So 99 cents, 90 cents, 90 cents, 82 cents, 44 cents, 80 cents, and $1.06 per share. Now, again, it's like, people are like, well, Mark, isn't it risky? Yeah. But at the same token, look at how is it that they're positioned well. And this is actually how, portfolio should be put together. Now, I know people are talking about, yo, my young eyes, or my eyes aren't that young anymore. So here you have it. So again, you have two positions of treasuries. One is at 35 and then another one at 35%. And then, of course, you have cash at 28%. Now, look at the actual exposure within the options side of it, 7%. Less than, I mean, and then this one's probably getting crushed right now at the time being, but it probably needs to be updated, but essentially like -5%. So again, it's like, they're well balanced as it pertains to essentially getting revenue from not only the dividends from treasury yields, but then also essentially, whether or not the stock goes up or down within that straddle position or covered call position. Again, that's where they find themselves, and it's amazing.
We got a couple of answers to the question earlier.
Okay.
We got the 10K for sure, so they're going to use it to look at 10Ks, and then also we have to dissect my stock my stock bay SMH. Okay. Someone else says it's going to help them with their thesis on fintech companies.
Good.
So that's cool.
The way it should be. And hopefully that, each and every single one of you were able to gain some significant value from this. Again, remember, it's a tool. So of course, it's knocking out a large chunk of the data by analyzing it for you. And then essentially from there, don't try to literally draw AI yet to literally draw up to any conclusions and then just run off of those conclusions. Though that I will say there are quite a few AI ETFs out there that have been crushing the market. But again, all investment is risk and it should be treated as such. So again, take it, I always say, just like anything else, take it with a huge grain of salt. But I hope that, each and every single one of you finds significant value within, just within this episode. And I'm sure that a lot of folks are going to be like, okay, hey, well, what was he saying? How did he do this? What were they talking about? Like, okay, and who is it that we talking about? You know what, Levick, if you can, sir, go ahead and throw the link in the chat for the people. We are talking about Claude.ai. And it's kind of a cool name too, Claude. No, I'm not naming it. I think Aisha is much cuter. Then somebody needs to go out there and create Aisha. And if you create Aisha and if you want it to be different, I mean, then essentially go ahead and allow it to essentially create documents. That's the next frontier. So, there you have it. All right. So, is there anything else, Jolene?
Those are the 3 things that we wanted to address in this episode.
I know, because I had some more heat coming through, but I guess we got to save it for another day.
I will take all the responsibility for that because we want these episodes to focus on hyper focus on a tool so that when you come back to this episode, it's like, oh, this was the episode about Claude and there was an example given. And we discussed AMD earnings and then we took the earnings and put it into Claude. So real-time application of one specific tool. So next week, y'all come back and see what else we're going to be talking about.
So just for the folks out there, because, I'm probably sure people are going to be like, well, talk to me a little bit about the company. So let's see if I can pull up some information about our wonderful friends over there at Anthropic. Give me a second. And if I can, I'll share it with everybody. There they are. Okay, so there's not a lot on them, but again, and I may get to this on a whole nother day.
Okay.
But we got to save that for a whole nother day. All right, so this is Anthropic. So pretty much they're a private company. They were created by, pretty much their founders are folks in which that actually used to work at, I think, OpenAI. But I mean, Anthropic is this AI safety and research company that's working on to build reliable, interpretable, and steerable AI systems The company focuses on research into increasing the safety of AI systems, increasing the reliability of large-scale AI models, and developing the techniques and tools to make them more interpretable, thereby helping to build more capable, general, and reliable AI systems in a way that benefits people. So I kind of like that. And again, here's their team, and there's some news about them. Like, for example, SAP invests directly into 3 AI startups. One of them is Anthropic, and then the other one is Cohere, which is more so on the software-based side. And then, of course, the $4.1 billion rival, OpenAI rival, debuts the chatbot, and this was back in July of the 11th. So it's been pretty much an interesting thing, and you can see how much they've been backed by. And of course, if you're interested, you can always, buy shares. But again, even holding shares like this carries risk. This is through Forge. I like Forge. I used to like Shares Post, but now I found a home here at Forge, and they do good by me. But again, learn some more information about them. They do some pretty cool stuff, and I can't wait to see what else comes next. And of course, if the folks from Anthropic, if this ever catches your attention, you're always welcome to be a guest on the show. That way we can talk more in depth about what's coming down the pipeline or what is it that you guys are working on. But outside of that, that's Anthropic, which is brought to you by Claude. So again, thank you everybody for joining us. I wonder if Vic is going to hit us with a meme before we leave.
You never know.
Outside of that, be sure to like, comment, and subscribe. We hope that you enjoyed today's show, and we will catch you guys in the next one. But be sure to check out tomorrow's show with Abby and Chris on the Red Line. And of course, you got Mark and Mo on Thursday. Until next time, I am Mark Monroe.
And I'm Jillian GC, in the place to be.
And this has been Your Come Up, brought to you by Executive Education. We'll see you guys in the next one. Peace.